Before I start this, I want to talk to you about the general tax laws that are imposed around the world, and you should be going by these laws so you don't have a tax problem later. A lot of your countries like Italy, Germany, Australia, Canada has real high taxes if you're a resident of those countries, and they tax high worldwide income. Also, if you're a U.S. citizen, it's not just leaving the country. You'll be taxed on your worldwide income if you're even if you're not living in the U.S. because you're a U.S. citizen. And the only way to get around that is to relinquish your U.S. citizenship. You can mitigate those taxes somewhat by getting in using the foreign earned income exclusion, which I've got other videos on that you can look at. Generally, if you really want to just eliminate your tax, that's the best way to do it. Puerto Rico's, I don't really have a lot of faith in Puerto Rico. If you can do an international move, why don't you just go ahead and move and relinquish, and you can still go back to the U.S. if you want to do it. But what it's going to do is it just solves all your tax issues. Going to Puerto Rico, you're in the hole, like I mentioned to you before. When you go to Puerto Rico, you're going to pay around almost $20,000 the first year just in fees, not including taxes. So it's not like you're not going to get around everything. You're going to pay high fees, and you're going to pay some taxes when you go down there. So, licensing fees, to give you an example, in St. Kitts are like $180 a year. That's all you pay. It's just incredible. There is a 2% business tax, but it's almost nothing. And you can get around that too by don't even have your company in St. Kitts. You can live in St. Kitts, have your company outside of St. Kitts and pay no tax. There are loads of different ways you can do that. But you need to make sure you can get it to zero, close to zero, by doing it right. But you need to make sure you're doing that. Also, with your current business that you're currently working in, work offshore. This is one of the things that a lot of people, I get more questions about this than anything. It really depends on your business. I'll be honest with you. If you're a dentist and you got to practice in New York City, you're losing probably 50% of your money now with state, federal, and Social Security tax. It's if you're meeting with people personally, face to face, it's a pretty difficult way. You really can't do it. You need to have some internet type business. Now, can a dentist do it? Yeah, but not that way. He would have to do something like. In fact, I would tell you, if you're a dentist and you want to try to test this to see how you like it, and you're meeting with people in New York City or California or any other state, there. And you want to do something that's similar to what you're doing, but you're interested in it and you've got some sort of knowledge in it. Here's a good example. Why not get involved with dental sales of equipment, because you're real familiar with that type of business, and do it internationally. Now, you're still going to be taxed worldwide income and local income that you've got until you literally move outside the country. But you could start it, see how it goes. And then, what I would be doing is getting a second passport while you're doing that too. And then if it works out, then if you want to shift your business, you might find out you make more money than that than your dental practice. And you can literally do that from a country outside of where you're at, in a pure tax haven country like St. Kitts. We've got tons of countries you can do that with, territorial or pure tax haven, and do all your selling outside of the country. Or if it's a pure tax haven, you can get around all taxes. Just depends on the type of arrangement you have. But look to see if that type business, if you got an interest in that, then test it and do it offshore. Try it for a while and see how it works. And you can keep your dental practice with what you got, and then go from there. This is the thing you have to look at. Now, when you go offshore too, you need to, like I said, I would pick something that you're interested in, that you already have knowledge in, and this way, it's not so difficult to do it, and you might have to deviate from what you're doing now. It's a lot easier to do this before your company gets real big. If you're a fairly young guy and you're thinking about wanting to get your taxes to zero, it's a lot better to do it before your business gets bigger. You get in that comfort zone, and although you complain about high taxes, then you don't really do anything about it because you're having to start back over again. So the sooner the better. Now, if you're close to retirement, this is another thing too. Is you can literally relinquish, and then you determine your taxes from then on out. If you've got a lot of crypto assets, you can sell them tax free. If you're outside, you've left your country. If it's a high tax country based on residency, or if it's the U.S., you would have to relinquish your U.S. citizenship. If it's you can pick stocks based on equities that don't have taxes on dividends. Remember, and I've got other tapes on this, getting outside the U.S. is not necessarily, or going offshore is not necessarily going to get your taxes to zero. You got to know what you're doing, okay? In some cases, you can pay more taxes than offshore. If you buy equities in Switzerland, there's a withholding tax of 35%. And they got one of the highest withholding taxes of any country in the world. So you got to know what you're doing when you're doing this. All right, now, also in this video, what I'm going to do is I'm going to actually show you some figures compounding tax-wise on money that you saved from going offshore, and the taxable income that would have instituted, and then a compound interest on top of that. And it will stand you how much money you're going to be losing just over a middle part of your lifetime. Also, if you got at least $150,000 US a year that you're making, or a net worth of at least $1 million US, and you want to get your income taxes to zero, or you want to get a second passport as quick as 3 months, do three things. Hit the subscribe button here to the right of your screen. You'll get new videos as they come out automatically. And don't forget to hit the notification bell next to the subscribe button. And I'd like to hear from you. If you got a question or comment, just put it below. And number 3 is go to our website, www.citizenshipquickly.com, and just ask for some help, and we'd be glad to see what we can do to help you there. All right, now let's look at some actual figures here on what we're talking about, on what we can actually do for you in this scenario. Let's say that you got a business. Let's say that you're making $150,000 US a year. And let's say you got state, federal, and Social Security tax that totals around 40%, not including taxes on your passive income from investments. This is what you would actually be losing by not implementing this concept and doing some tax planning, assuming that the income that you make is offshore is the same money that you're going to make onshore. Okay? Here's some actual concrete figures. And you can actually do this with a compounding calculator, or the internet. You can also do it on the internet with a compounding calculator to figure out your own situation. But if you got an income of around $150,000 US a year, at 40%, when you figure state, federal, and Social Security, depending on the state that you're in, you're looking at, let's just say it's $60,000 US a year, depending on the tax laws at that time and what Biden's going to have here. But $60,000 US a year in taxes, that's a fair amount. Let's say that you, by knocking this tax down to $10,000 a year, let's say, for instance, you're able to knock this down to where your taxable income is where you have to pay taxes is $10,000 US a year. By moving your business offshore and taking that $50,000 of tax savings, because you would have paid, instead of $60,000, you would pay $10,000. That leaves $50,000 US dollars of savings that you could take per year. If you break this out per month, it would be $4,267 US dollars a month. And let's say you could take that money and invest it 7% per year in real estate, let's say in St. Kitts. And in 20 years, that money would be worth $2,170,701 US dollars. Now, if your income was $300,000 US dollars a year, and let's say you got 40% tax on that. 40% of 300,000 is 120,000 US dollars, but by going offshore, you can knock that down to a 10,000 US dollar tax. That will leave you with 110,000 US dollars a year, or if you break this out per month, it would be 9,167 US dollars a month to invest at a 7% compound rate of return. And let's say you did this and you invested for 20 years in real estate in St. Kitts, you would have $4,775,334 US dollars. Now, you need to realize, too, that there is no personal income tax in St. Kitts. That's another added benefit. And in other words, you could live a great retirement life just off the money you lost in taxes and compound interest that you paid out to the tax man over 20 years. Now, I'm not an accountant, I'm not a lawyer. I don't do taxes or give out legal advice. I deal with real estate investments and tax planning for people who want to get a second passport, who are thinking about relinquishing their U.S. citizenship, or they want to qualify for the overseas foreign exclusion, or they're from a high tax country that's in Europe or places like Canada or Australia, and they want to get those taxes down real low. This is what we'll work with you on, the strategy to do that. And we can show you how much you're losing by your own situation when I work with you. I can show you that, on paper, and then you can more or less go from there. But just by taking this money that you're going to end up losing, in state, federal, and Social Security taxes, man, it can just save you a fortune over a period of years if you take this and you acknowledge it and then try to work with it. The key thing is to pick, if you're going to do this, is we help you pick a territorial tax country or either a pure tax haven to run your business from. You're really better off doing it from there because leaving the U.S. and just going to another high tax country in Europe is not going to solve your problem. It's just going to create the same problem you had before, and we'll work with you on doing that. We deal with over 100 countries all over the world, but these are things that you need to think about and plan ahead of time. If you've got a question or comment, just put it below, and be glad to get back with you. And also, if you go to our website, www.citizenshipquickly.com, and hit the top bar that says Apply with Us, fill out those questions. Hit that bar at the bottom that says Send it to us. We'll get back with you and see what we can do to solve whatever problem you got there. And don't forget to hit the subscribe button to the right of your screen here and the notification bell right next to that subscribe button. And I look forward to talking to you on the next video. Take care.